Hello, Maverick traders. Welcome out to your market roundup, November 13th. Corey here with you as per usual on Mondays. Today we're going to take a look at broad markets. We'll talk about some interesting news like a debt downgrade or warning of such from Moody's. We'll talk about different sectors and where we think, as the Wayne Gretzky saying, skate to where the puck is going, not where it is. And then we'll look at our best ideas, and we'll have some bullish, we'll have some bearish ideas. We're always trying to find the best opportunity for our capital. Best risk, best reward, best probability.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so let's get to it and take a look at markets. So, pretty quiet day. Dow, S&P, NASDAQ, all flat. Oil was up about 2%, and that's after really getting hammered the past couple of weeks. Gold, we touched on commodities. I just did not like them the last couple of weeks. We emphasized that point last week. It's going to be interesting as you hear today's message because I'm warming up to gold specifically. Not so much oil, not necessarily energy, but gold specifically, and I'll try and lay out the case for why that is. On the daily news, Moody's lowers U.S. rating. This came out on Friday, and the first time the markets reopened since that, well, a nothing burger. Markets were completely flat, and it was like nothing had ever happened. Remember, Moody's, of the big three credit rating agencies, S&P, Fitch, and Moody's is the only one that has a AAA rating on the U.S. right now, so potential downgrade. Why did the markets just yawn at that? Because it's not new news. They didn't say anything that the markets did not already know and understand, so it just was not anything that changes the dynamics for markets. Pfizer wants in on the weight loss drug market. The potential for revenues and earnings and opportunity is clearly there. Advanced decline line about half and half today, as you would expect in a sideways market, and the 50-period moving average continues to improve, now 44% of stocks above the 50 MA. As we look at the S&P, so a couple of weeks ago, I made one of my better trading calls this year talking about a rally, and this was 2 Mondays ago. I really felt strongly that we would at least rally up towards the top of the range. And if you draw this downtrend line, not only have we done that, but we have now just pierced that downtrend line. And so, and I talked about this last week, that basically I thought there would be kind of an ugly day mixed in, a little bit of a pullback where people would say, oh, here we go, we're about to break down. But I was of the camp that we're still going higher, that we're going to push a bit higher before this thing is done. And so far, so good. We're still pushing higher. I want to continue with that tone. I just think equities are going to push a little higher here in the short term and maybe go test a little bit higher prices. Now, it's not as good an opportunity as it was a couple of weeks ago, but there's still a little bit of meat on that bone. As we look at the NASDAQ, again, it pierced the trend line a little earlier than the S&P did, but same thing, a little check back and then working its way higher from there. So equity markets still look fine. As we look at the heat map, energy continues to lag. Even with oil up today, look at how heavy energy is. Why am I getting optimistic on gold and not energy? Well, I think it's just a different commodity altogether. There's different reasons for interest and buying and all those sorts of things. And I think it's just, I would much rather come back to gold, which has a much better chart, and look at it as an opportunity. But you know, a lot of these other cyclical sectors and whatnot, it was just a mixed bag today. Eli Lilly had some specific news, so bright green. You can see over here in the healthcare and biotech space, there was some bright green mixed in. But overall, a little bit of red, a little bit of green, just kind of a mixed bag. Now, for some bullish and bearish lists, you'll notice two gold names, and this follows last week where I was quite pessimistic on gold, specifically on oil, on energy. They were all in my bearish list, and what a difference a week makes. Gold and those things came down hard, which I think now presents the opportunity. So just as I was negative last week, I'm going to have a little bit more positive tone. So here's a chart of GLD. Now, if we look at this, we came down and filled the gap. That's important. This is the level it needs to hold. You can, if you look at this from a trend perspective, 20 crossed above the 50. We talked about last week being negative on it. Well, it certainly dropped sharply over the past week from 184 to down here in the 170s. Today it reversed back up and at least offset Friday's decline, kind of a bullish engulfing type of formation. If we were to really look at a long-term chart, I'll make a little drawing here. Here's the 2011 peak in gold. And then what's happened since is we've climbed back up and touched that high about 3 different times, that 2011 high. Even got just poked our head above that high. So it's kind of like this, just poke our head above that high but can't break through. And we find ourselves kind of in a little pullback right here. But if you look at the really long-term chart of gold, it's in this huge cup and handle type of formation. And the resistance is up near 190 or thereabouts. It's up there at about $2,000 an ounce in gold prices themselves, or in GLD, this ETF, it's at about 190 per share. I think gold is going to make its way back up there, and that these are just pullbacks worth buying. So whereas energy and oil is in a downtrend, gold got hammered last week, but it just pulls us back to this deeper pullback zone. And I think this is buying it wholesale, and then after it rallies, sell it retail, right? What do retailers do? They buy at wholesale prices, they sell at expensive prices. We're getting a discounted price. I think that's kind of interesting. And here's a gold miner, and gold mining stocks look as a group pretty bad, but GFI has some relative performance. It's holding its uptrend better. And here's what's interesting. Even with gold reversing, GFI stayed down. But what I think might be happening here is a false breakdown. In other words, we poke our head below the 50 and then we turn right back above. So watch for a green candle, watch for a reversal back to the upside. If we get a candlestick that jumps right back above this level, I'll probably enter a bullish trade, and you could target at least a move back up towards the highs. I also like, if you follow Elliott Wave, it's kind of that ABC. These are how corrective patterns work. You fall, you have a lower high, and then you fall one more time, and then you reverse back to the upside. So I feel like as we look at the price action, it's just a retracement. In fact, if we take it Fibonacci levels, it's about a 50% retracement of the advance and so forth. There's a lot to like about this pullback. Now, what if we fall lower tomorrow? What if we don't spike right back above the 50? Well, I'm not going to touch it below the 50, but if we reverse back up in the next day or two, right back above that moving average, I think this will be a false breakdown. We can have a stop below and a really good target up above. How about some bearish ideas? Well, this is a chart of Coinbase, and Coinbase looks like it's in an uptrend in the short term. But to me, this is a big exhaustion high on heavy volume. Long upper shadows are often a precursor to a drop. Look at long upper shadow and you have a big drop. Long upper shadow and you have a big drop. Long upper shadow, and I suspect there's going to be a good sized drop here. And if you were to look at Coinbase, not on a daily chart, but on a weekly chart, it tells a different story. So I look at Coinbase, I look at a lot of these like I look at GameStop or AMC, the theater chain, or Coinbase. I'd put in sort of in this category of meme stocks. In the case of Coinbase, it's related to crypto. and it had its big boom period, right? When everybody was just loving crypto and Coinbase came public and it skyrocketed. And since then, it's been like this weight that's just sinking in the ocean. And so it'll spike up, but then it'll fall some more, and it'll spike up, and then it'll fall some more, and it'll spike up. And so I've looked at Coinbase, and this has worked really well as using some of these big spiky upside moves. They're really short covering rallies more than anything else to initiate bearish positions and then play that back to the downside. And ultimately, I think in the coming months, Coinbase is going back to the 70s. And frankly, I'd expect the 60s and the 50s, and this thing is really going to continue to spiral to the downside on a longer term basis. Now, that's a long term story. In the short run, you can trade against this peak and expect it, I think, to move back into the 80s and the 70s here over the next couple of months. Deer, just a more standard, more obvious. We're in a downtrend. We're in this downtrend. We're still below downtrend lines. We've got descending triangle type of pattern where you're establishing a little bit of a floor, but those lower highs. And I suspect we're going to break to the downside in the not too distant future. So not too much to add there. It's just an ugly bearish chart that looks like it's going to continue to test some lower prices. So seasonally, we've entered that bullish period and the markets are trading the seasonal patterns very well. I talked about precious metals and commodities declining sharply. This was our message last week, but I'm going to differentiate gold specifically and say gold looks like a buy signal to me. Does it look like energy is going to go screaming higher? Not to my eye, not yet. Maybe it will, maybe it won't. But gold looks like it can really work its way higher, and we'll see. You know, if it can hold these levels right here, that's the important point, and then it's worth considering. CPI comes out tomorrow. And the Fed's watching CPI. It's expected to back up from 3.7 to 3.3% annualized. And that's a good sign if that happens. So watch that number coming in. We've got Alibaba, Cisco, Home Depot, Palo Alto, Target, TJX, Walmart, a lot of different companies reporting, and most of them in that retail space. Hope you've enjoyed today's market roundup. Have a great week. We'll see you next time.